Hey guys, welcome back to Crypto Skillet. In this video, I'm back with another Bitcoin market update. So since my last Bitcoin video, we have gotten this nice little pop-up out of our high time frame demand zone. That's this weekly demand zone that we marked out in our last video. But now the question is, was this low at 80K the absolute bottom, or could we expect one more push lower before a full-on reversal? So I'm going to answer that question for you guys in this video and show you the exact levels that I'm looking at. And I'm also going to show you what I think is the absolute A+ trade setup to get into a long position. So I'll explain exactly what I'm looking for to get into that. Okay, we're going to start with a high time frame overview, and then we'll get into the lower time frames as well. Of course, in these sort of choppy conditions that we've been in, I tend to prefer day trading over swing trading. So I'm getting in and out of positions on low time frames and holding them for relatively short periods of time. Okay, so we're going to get into some of the lower time frame stuff as well, and I'll show you some of the trade setups that I've been using, and of course what I'm looking at going forward on the lower time frames as well. Okay, now we're mostly going to be focusing on Bitcoin here. Of course, in the last video, I did share a little bit about ETH as well. So if we take a look at the ETH chart, you can see it's pretty much the same story. Okay, we bounced here out of our high time frame demand zone. And if we look at the ETH BTC chart, we're getting exactly what I had expected as well. Okay, remember I pointed out this green zone here on ETH BTC, and we're getting a nice little pop-up out of that as well. So basically no surprises on those charts so far. But again, I'm mainly going to be focusing on BTC in this video because of course Bitcoin does tend to dictate the pace for the rest of the crypto market. Okay, so a lot of really important things I'm going to be covering. Now I'm going to try to keep this one short and to the point here. So if you appreciate this content, do me a favor, leave a comment down below, like the video, and of course subscribe to the channel, and make sure you ring that bell so you get notified every time I post a new video. And of course, if you do want to trade, you can get up to $10,000 in exclusive bonuses plus up to 70% off your trading fees when you sign up to BTCC or to Bitunix. Okay, those are partners of the channel. They're both phenomenal exchanges, and they're both non-KYC, non-VPN exchanges as well. So that means you can pretty much sign up from anywhere in the world and start trading in just a few minutes. And I have done complete tutorials showing you exactly how to use those exchanges, so I'll leave links for those down below in the description and a card above as well. And I only partner with exchanges that I trust and that I actually trade on. And both BTCC and Bitunix are fantastic, so big shout out to them. Again, links for those down below in the description if you want to take advantage of those bonuses. And of course, guys, do keep in mind that nothing in this video is financial advice. I'm not a financial advisor. I'm a trader and an investor sharing my thoughts, experiences, and opinions. This is strictly for educational and entertainment purposes only, so always practice proper risk management and do your own research before making any trading or investment decisions. And now with that said, let's get into it. Okay, so on the high time frames here on the Bitcoin chart, everything is still looking really good. As I told you in the last video, my base case here is that ever since about May of 2025, we've been in this big corrective structure. This is a complex correction that is correcting this impulse that we had right here, okay? We have this very, very clear 5-wave impulsive move, and that was coming from our lows here at the bottom of this green zone at about 74K. Now, everything that has followed since then has been part of this complex corrective structure, and we know in Elliott Wave that these corrective structures can take many different forms, but the most important thing to take away here is that the key level here is 74K. Okay, no matter what price does during this corrective phase, it should not breach the origin of the impulse right there at about 74K. All right, so as long as we're above 74K, we're above the origin of that impulse, we're still looking bullish on the higher time frames. And again, we do have this high time frame area of support that I've marked out here in green. This is our weekly demand zone. And since my last video about Bitcoin, we did get a big push down on high volume that got bought back up very quickly. So we got a nice little pop out of this demand zone. And now the question here is, have we completed this last wave of our corrective structure? Now there's a case to be made that we have, but I could also see the potential for one more push down. And in fact, I actually hope we get one more push down, and I'll explain why. So if we come here to the weekly time frame, there is a key feature that has marked pretty much every one of our major bottoms this entire cycle, and that is a weekly sweep. So what that means is that we make a key low, a key weekly low, like take this one for example. We had this low right here, and then look right here, we swept that low. So that means that we wicked down below it, but did not close below it, okay? It got bought back up, and then the weekly candle closed above that level. Okay, that's a weekly sweep. So we had one right there. We also had one back here, so you can can see we had this key weekly low, and then right here we swept that level and then closed back above it, and turns out that was the absolute bottom. Okay, then we had another one. If we come back a little bit further, you see we had this key weekly low right here, and then we swept below it, and then that was the bottom, then we sent. Okay, we can go back even further. So right here we had this weekly low, this set of weekly lows, and then there was our sweep right there. Okay, we swept it, closed above, and then sent to new highs. Okay, there's another example right here. There's our weekly low, there's the sweep, and then it sent much higher. Okay, and even at the very, very bottom of the last bear market, you can see we had this weekly low right here, and then boom, right there on that candle, there's our sweep. Okay, we swept it, closed above, and then that was the absolute bottom before we just full sent. Okay, so as you can see, there's a very clear pattern that we've had throughout this entire cycle. Now, does that mean that we have to sweep this low here? No, it doesn't. Okay, but if we were to sweep this low, okay, I'll go ahead and mark this off. Here's our weekly level. And as of yet, we have not yet swept it, okay? But if we were to do so, that would give me much greater confidence in taking a long with size. Okay, again, just based on history, that tends to mark our major bottoms. And of course, that would be right here within this high time frame demand zone. So to me, the absolute A+ long setup would look something like this, okay? We would get a weekly candle where the body remains above the level, but we wick down into it, then it gets bought back up and closes somewhere above that level right there. Okay, so if I see this on the weekly chart and we get that sweep right there and then we close back above it, I'm gonna go ahead and long with size. My stop would go there below the lows, and then I would at least be targeting this area up here. This is that weekly supply zone that I pointed out in the last video. Okay, that would be my first sort of take profit area. That would be the next significant level of resistance. And then depending on the reaction that we saw there and depending on the structure, whether it was impulsive or corrective looking, we may even be targeting new all-time highs at that point. But again, one thing at a time. Remember that our job as traders is not to predict, but to react to what we're seeing in front of us, okay? So it's an if this, then that type of thing, right? So if I see that weekly sweep and a reclaim and a close above, that would be the absolute ideal setup. Okay, now if I come down here to the daily chart, what other levels are we looking at here? Well, here's a tweet that I posted a few days ago. I said that BTC is now testing the yearly open level with a potential impulsive structure on low time frames. It needs to close and hold above this level at about 93.4K for bullish continuation. If it's above this level, that's bullish. If we're below that level, then likely means more chop. Okay, so now I'm gonna pull up that yearly open level. Okay, there you can see that it's right about 93.4K, and that is a very important level, and you can see that that did act as resistance. And just as I said, if we're back below that level, then that likely means that we're just going to be chopping around for a while. And what that could look like on these lower time frames is some sort of ranging price action between about that yearly open level and this low here at about 80K. So I already mentioned that if we get this weekly sweep and then a close above, that would be the signal for me to go long, right? With the stops below those lows. But what if we don't end up getting that sweep? Well, the next most important level would be this yearly open, okay? So if we get up here, we close above, we hold on a retest, and it acts as support, then that would be a trigger for me to get long as well. Stops below the lows, targeting sort of the next level, okay? We have this current year mid-range, that's right about 100K, plus of course 100K is an important psychological level, and we do have this area of supply right here. Remember, that's this move up that preceded this big expansion to the downside. Okay, that's sort of our daily level of supply. And then of course, right above that, we have our weekly supply that we've already marked off. Okay, so it would just be a level to level play for me. But again, the most important levels that I'm looking at here on the upside would be yearly open level. That's around 93.4K. And then these local lows here, which is at about 80K. Now, if I go down to an even lower time frame, like on the 4-hour chart, okay, I'm gonna go ahead and get rid of the yearly open marking. Okay, now we have a clearer picture of what it's looked like since we've bounced off these lows. So we got a push up, a push back down to make a higher low, and then a push up to make a higher high. And then we've sort of reversed about half of that move. So fairly choppy price action so far. And what could happen is that we could be forming some sort of range here. Okay, a lot of times when bottoms form, they can take a while to develop and they can take many different shapes. Okay, we could be getting something like this if I get my pen tool here. So we could have this move up here, this 3-wave sort of move. Then we could have another sort of 3-wave move, another move up, another move down, and a sort of compressing, almost triangular type shape, which then resolves to the real impulsive move upward. Okay, this could also form a triple tap type of thing where you have a low like this, then a lower low, then a higher low before the ultimate expansion upward. Okay, we could get a 3 drive structure where you have a low, which you can see right here, then a lower low, and then one final lower low before the real expansion upward. Okay, again, there's many different shapes and forms that these kinds of bottoms can take. But again, as long as we remain above 74K, is still bullish on the high time frames, and it's ultimately all noise. Now, I've already got a range marked off here. Okay, there you can see this range that goes from these lows up to this high. It then came down and retraced more than 50% of that, so that establishes our range. And I've actually got the range quarters drawn on here as well. You see it came down to about that 75% level, and then came back up, swept those highs, and now we're back inside the range. Now, if you were playing this on shorter time frames, there's an argument for a clear short to be taken here. In fact, if we zoom out a little bit, you can see that if we drew a trend line from up here down here, and I've already got that marked off as well. Okay, there you can see it. There's our trend line. Okay, that happened to coincide with this sweep of the range highs. So if you were looking for shorts, that would have been a really good area with the confluence of sweeping the highs and also tapping that trend line. Okay, we've also got this other trend line that we could draw from this low up through this low. I've already got that marked off. There you can see it. Okay, we have this trend line. So if price were to come down and tap that level and then start to bounce, that could also be a potential spot for a quick scalp trade. Okay, but I actually did not take this short despite seeing all this confluence, and I'll explain why. So if we go down to the hourly time frame, this is a little bit clearer to see. Okay, so off these lows right here at about 83.8K, we had what looks to be a potential impulsive structure. This is what I was referencing in that tweet. Okay, so this would be like a wave 1, a wave 2, a wave 3, a wave 4, and a wave 5. Okay, and if this is a valid impulse, this tells me I need to be looking for longs and not for shorts. Okay, plus remember, we're right here within this green zone, which is our high time frame demand zone. Okay, that means it's an area that should act as major support, meaning longs are going to be favored over shorts. Okay, now for a little bit of context, and I don't want to get too much into the weeds here on the Elliott Wave stuff, but basically I see 2 possible scenarios here. So one scenario is that this entire move up has been a 3-legged corrective move, in which case we could expect a bigger move downward to possibly sweep out these lows, maybe giving us that weekly sweep that I've been looking for, plus a range low sweep, which then afterwards, if we were to reclaim that, okay, get back above these range lows, that would be a clear long trigger for me with the stops below the lows. Okay, so that's possibility 1. Now, possibility 2 is that starting right here at the origin of this potential impulse, we've actually started a new larger move to the upside. So if I zoom out just a little bit here, I'll go ahead and redraw this as well. So basically that would need to look like this. We would need this impulse here followed by a correction that does not breach below the origin of that impulse, followed by another impulse, another corrective structure, and then one final impulse. Okay, again, giving us a larger 5-wave impulse to the upside, just like we had on the higher time frames way back here. Okay, this is what I've been pointing out. We have an up move, a correction, up move, correction, up move. Okay, that's our 5-wave structure, and each one of those up moves is a miniature impulse in itself. Okay, so if we were seeing something similar, then this little impulse right here would need to be the first of 5 waves. Okay, so on its own, this is not enough for me to say, yes, we've definitely started the next major move to the upside. But because of the clear structure, it's enough for me to not be looking to take shorts right now. Okay, I'm much more interested in seeing this either reclaim up above the yearly open, and then I would take a continuation long to the upside, or go ahead and break down below the range lows, giving us that weekly sweep, followed by a reclaim, and that would be another long trigger for me with my stops right below those lows. Okay, so I hope all of that is clear. Now, one other thing I want to touch on very quickly. This is the kind of trade setups that I've been taking on the lower time frames for day trades or intraday trades. And this is the same trade setup you've seen me talk about over and over, and I mentioned this in my last video, but it basically looks something like this. So when you get a low and then a high, and then you get a lower low followed by a higher high that breaks this market structure, okay? It breaks this high that we established right here. Then what you do is you mark out this entire up move right here as a zone, and then wait for price to retrace into that zone and then start to reverse up out of it, okay? That is your long trigger where you put the stops below your lows, or they could go below this zone, or if you wanted to be even more conservative, you could put it below this low right here, okay? That would be where your stop loss is placed. And then you enter your long trade expecting that continuation up. Okay, and of course, if you were looking for shorts, like if you were in a higher time frame area of supply, this would all just be inverted. Okay, but again, right now I'm primarily looking for longs because we are in high time frame support. So I'm going to show you some specific examples of how this has been working out really well lately. Okay, so I'm going to go down to the hourly time frame here, and I'm going to back this up. I'm actually going to use replay mode so you can actually see this step by step. Okay, so back when price was right here, we had just had this big downtrend, right? Then we had made a high, then we had come down even lower. And now what I was looking for was for price to breach this high right here. So I'm gonna go ahead and play it forward. Okay, there it goes. Price has now officially made a new higher high above this high. So I marked out this zone that you see in purple here. And now what I'm waiting for is for price to return to this zone and start to reverse. So let's go ahead and play it forward. Okay, so price returns to the zone. Okay, it holds it as support, starts to reverse. Okay, and now here I'm looking to get long. Okay, so where do I put my stop? Just below these lows, which just happens to be below this box here. Okay, and where am I targeting now for my long trade? I'm gonna look for the last up move that preceded this big expansion downward. Okay, so if I mark it off here and drag that over, that's the area that I'm targeting. Okay, so keep playing it forward. And there we go, we break up out of it. And there we go, we have now hit our take profit. And if we look at the risk to reward on that trade, okay, let's say we had our stop right about here, and there was our take profit level. So you see that was a 7.8R trade. Okay, again, one of the most consistent trade setups, one of my all-time favorites. I use this one all the time, both on higher time frames and on lower time frames. Okay, we also had another one right here. So I'm gonna go ahead and replay this as well. Okay, so here's what it looked like. So we had made this low and then a high, and then we made a lower low, and then we had breached above this high right here. Okay, so now at this point, we're looking to mark out this last up move. Okay, so I'll drag that over. I'll mark that out in purple. And then when price moves down into that level, that's my trigger to get long, stops below the box. And then I'm targeting this last up move right here that preceded this big expansion to the downside. Okay, so if I mark that off, it looks like this. I'll go ahead and color that red. Okay, that's my take profit level, so let's see what happens. Boom, there we go. Out of the trade. Absolutely textbook setup there. And you'll find this kind of thing all over the place if you know what to look for. And again, this works on high time frames, low time frames, medium time frames. It really doesn't matter. Obviously, as I said before, right now I'm focusing a lot more on these little scalp trades, these day trades, while conditions are quite choppy. But of course, the higher time frames are important to take into account, even when you're trading on the lower time frames. Okay, as I said, the reason that I'm not really looking for shorts, even on these lower time frames, is because look, we're right here in this green zone, this higher time frame area of support or demand. And we know that trading works best when the lower time frames align with the higher time frames. Okay, so that's the way that I'm playing this. Again, that's my views on the low time frame immediate levels that I'm looking at, the higher time frame levels as well. And again, as I said, the key takeaways here, the most important thing to know is that 74K level is absolutely critical. Okay, that's the level that we should not breach if this Elliott Wave interpretation is correct. So I do not expect that we will go lower than that. Now, I really hope that we do actually make one more lower low to give us that weekly sweep that I talked about. All right, that would be my A+ long setup. Okay, but no matter what happens, whether we breach that low or not, I do expect some kind of bottom to form here around this green zone. And then of course, what follows that bottoming formation would be an absolutely explosive move to the upside. Okay, it could take a little while to play out. A lot of times bottoms do not form instantly, but that is my ultimate expectation here. Okay, so I hope this has been helpful, guys. If you enjoyed the video, do me a favor, smash the like button and be sure to subscribe to the channel, hit the notification bell so you get notified every time I post a new video. And again, if you do want to trade, I've got my links down below in the description where you can sign up to BTCC and to Bitunix. And when you use my link, you can get up to $10,000 in trading bonuses, plus up to 70% off your trading fees. So go ahead and check that out, guys. Also, feel free to follow me over on X and join my Telegram group as well. And I've got links for all that stuff down below in the description too. So all right, guys, that's all for now. We'll see you in the next video.